Actually, it's me. There we go. All right, and we're live for another TNT Entrepreneur Education session with the Summit Prep Program here. I'm Jesse Weave, your Community Development Lead. Really excited for today's panel. I was up late last night thinking about it, and super pumped to have
He's frozen for everyone, right? Yeah. Okay.
He's
Jesse, you're frozen.
well. Yeah.
That's the same thing. I was like, it's not me, is it? Maybe we should just dig in.
I'll send a message on the Slack.
Of course, the moment I go live is when my computer's internet cuts out. Hey, everybody. I'm back. And we're live for TNT education session here at Start of TNT. We're doing the Summit Prep Program, and we're very excited today to have with us to talk about how to get a meeting with an investor. Three incredible panelists covering the full gamut of what you need to know from the various perspectives around getting a meeting with an investor. So we've got a VC panelist. We have Matthew He of... And we're going to get the echo. There we go. We got Matthew He of Brightspark Ventures joining us today. How are you doing, Matt?
I'm good. Good to see you twice, Jesse, on the same Zoom call.
Yeah. I'm just trying to show everybody my lovely face. Then we have the founder of Nimble Science, Sabina, joining us. How you doing, Sabina?
Good. Thanks, Jesse. Happy to be here.
Awesome. Yeah. And we have Mark Lepp, one of the co-founders of GrainFox, also a TNT investor out of Manitoba. How you doing, Mark?
We're great. Yeah, that's good. Thanks.
Good. All right. So I just did a quick introduction of you three, but I'd love you to share a little bit more about yourselves before we start diving into the questions that I've got for you. So let's just go around the table as I just introduced you, Matt, Sabina, Mark. Quick introductions. Who are you? What's the firm? What do you do? Tell us a little bit more about yourselves. Go ahead, Matt.
We're happy to kick us off. It's great to be here, everyone. My name is Matt. I'm with Brightspark Ventures. Our elevator pitch to you, we're Canada's oldest venture firm. We position ourselves as early stage generalist investors, lead investors. So we really like to work with you for the long run. That's what we hope to be, is to build decade-long relationships, be there for your first, second, and third company, hopefully. And right now we're actively investing out of a new $100 million fund that we just raised about 4 months ago. So if you're raising, let's have a chat.
Awesome. Thank you, Matt. Sabina, why don't you tell us a little bit more?
Yeah, I'm a serial entrepreneur. First time, though, in the CEO seed. Nimble Science closed a seed round back in January with a $2 million USD seed round with a good mix of both local and including startup TNT investment, and then a few VC firms, primarily out of the US. And so now we're just in the thick of putting that money to work, building value and scaling the company and all of the fun aftermath that comes from having successfully closed a first priced round.
Awesome. Yeah. Sabina's round was a hot round of investment. We were very excited to be a part of it and have her win our summit stream out of Calgary. Mark, how you doing? Why don't you tell us a little bit more about yourself?
Good. Things here in Winnipeg are fully in fall, so it's weather is fall weather, so it's good. I'm Mark Lepp. I'm the CEO of a company called GrainFox. We help farmers in their bin to bank journey. So we help them make sales decisions for their commodities to maximize their profitability, we describe it as a well simple for farmers, for those that aren't in the ag industry. So I think in this panel, I'm unique in that, we've been in business for about 20 years. We started as a consulting business. We just pivoted into what is now GrainFox, completely pivoted our consulting business into a tech company. Over those last 20 years, we've bought and sold and invested in several companies that were complementary to what our core business was. And now actually also, besides having invested through TNT and other investments with startups, we are raising our Series A. So I can talk about both sides of what we looked at, and also the feedback that my own experience in this in the fundraising journey as well.
Absolutely, Mark. That's one of the reasons we wanted you on this panel. You got that great experience. And Matt and Sabina, we're super excited to get all of your insights today. So let's get started. If at any point anyone's got any questions that they just want to ask the panelists, they want to double click on something that's come up, feel free to throw a question into the chat, put your hand up, or just come off mute and try to get our attention. We'll let you jump in. So for all the panelists, right, before you even get started, diving in to raising. Calls you in the middle of a meeting. What are the key concepts that you need to know before you get into a meeting with an investor? Let's start just from a VC perspective. What do you think that the founders need to know and understand about VC and key concepts around raising capital from venture capitalists? And then we'll kind of do the same for Sabina and Mark. Start with you, Matt.
Yeah, 100%. I think the most important question I would love for folks to ask themselves before coming to VCs is if you are on a venture backable journey or not. And the odds are the answer to that question is probably no. We are a very, very niche type of financing for an extremely niche type of entrepreneurship, right? We're looking at making bets that can 10x to 100x in a very certain amount of time, which is 7 to 12 years. And that might not be aligned with what you want for yourself or your business. So if you realize that venture financing is not even right for you, generally speaking, you're going to avoid having to climb that uphill battle just to find out at the top that this wasn't for you in the first place. On the other hand, if you do know that venture financing is for you and you're certain of it, I think a very good thing to know is to understand what are the incentives on the other side of the table, right? What are we looking to do and how are we extracting value from this relationship? And just understanding what venture capital as a whole ecosystem and what the partners you're working with within their firms and their funds, they are prioritizing. And happy to double click on that if we want to.
Yeah, no, I think that gives us a good high level. We'll get into a little deeper here, but I want to hear from Sabina from the founder's perspective before they even go out and raise. What do you got to make sure you have in order? What are you going to make sure you know before you start going out there, even trying to get a meeting with an investor?
Yeah, I would reiterate a lot of what Matthew said, is to make sure that that's the type of investment you want, because it definitely puts your company on a certain type of path. But I think even before, whether it's a right fit for your company, is it a right fit for you? And do you really want to, marry your company for the long term? It's a long and messy journey. And I think unless you're a schmuck, once you take someone's money, you're working hard to deliver on that promise and that faith that they put in you. And so you really want to make sure that that's something you're ready to commit to for the long haul. I think before you put yourself, your own time in it, but definitely before you take someone else's money.
Awesome. Yeah, that's a very good point. We often akin this industry to marriage, right? As in the longest average venture capital investment is longer than the average marriage. So you're in this for the long haul for sure.
I think it's easier to get out of a marriage, quite frankly, these days. So, and almost less sad. So it's definitely like that for sure.
Yeah. Mark, just thinking, so people hear angel investor, they hear these people out there investing. What do they need to understand about angel investors? And kind of what they're looking for and how to approach them before they even get started?
I think it would be like, from my own perspective, I was, I've invested as an angel investor a few times in the space that I am currently working in or on the edge of that. So I think it would be important to understand who your angel investor is, or if it's a group, what area that they're focused on, to align yourself with the right potential partner. Like back to what Sabrina was mentioning, like I have resisted raising money for a long time just because of that, that long-term marriage. And I've had friends that have had VCs that they brought in probably just out of desperation, just to get some money in. It was a different environment than it is today. But those marriages turned out to be horrific for those CEOs and even majority owners with the wrong partner in place. So, as you're looking for if you're talking to angel investors, just do a little bit of research on who it is you're talking to and make sure that whether it's their portfolio, if they don't own it, like I own a business, so it's easy to do research on me. But if it's a portfolio that they have already, or groups that where their strength is, like find out where their expertise are, just to make sure you're aligned.
Awesome. Yeah, this is a great piece of advice to get us started. So Sabrina, we're going to come to you. So you're a founder that has accepted venture capital, and let's say like the other investors here are getting ready to go out and raise some from venture capitalists. We've checked that first box off. What do they need to do next? Where do they even get started? How should they be thinking about how to raise capital? Yeah, kick us off on this.
Yeah, I can say that Nimble did it wrong. We started too late with the soft introductions and building our network, and we really started pretty flat-footed. So I would say the best lesson learned is start early with the connections, building out your network. Like Matthew said, figuring out who's a fit, whose portfolio fits, whose mindset fits with you, and really well before you're ready to start raising. We were very fortunate in that we had an active first round investor that had a lot of those connections and really was willing to put the story and make those connections for us. And then it became just a volume game. It became, building a funnel, an exceptionally large funnel, and just hitting them all as hard as we can. And when it was a no or a stall or a delay, or it wasn't a fit for timing, and some investors loved it. It's all timing. So there's so many factors that had to line up. It's really the size of your funnel and how big you can make it. And I think the biggest way to get that funnel big is to start early with the connections and introductions. And that's my best piece of advice there.
That's great. Yeah. So get that funnel going. So you're getting that funnel going. You're going to make those outreach emails. Matt, how do you like when you're getting those soft introductions? What is good points in an email? What are bad practices in an email? How to be thinking about getting an introduction to the right VC? What are you seeing that are good practices when bad practices out there? Let's give these founders some advice here.
Yeah, on the outreach side, I think the single worst thing you can do is spam campaign and just put a bunch of, upload a list of 500 emails, put it through a drip campaign of pre-written scripts. You're getting nowhere with that. Honestly, in terms of warm introductions, if you know someone that's willing to make the introduction, I'd say 9 times out of 10, that would result in some level of interest of at least going through the deck and understanding if you're a fit or not. On the cold side, which I think you're going to find with the large majority of people on your list, perhaps, short, personal, to the point. That's what I would really focus on. And that can hit across a few different things. That could be a really short email, just saying, hey, we don't know each other, but I'm building in your space. This is why I think I could be a good fit for your fund. Demonstrates that you've done some research on them, on who they are, what they invest in. Demonstrates that they have money to invest at all. And that can even be as a LinkedIn message. And I've even received cold calls on my end, just saying, hey, 15 seconds of your time. We do this. We're here. Let's chat if you're open to it. But I would say getting really personal and making them understand that they're not just another investor name on your list that you're hitting up, but somebody that you actually want to work with. That does matter.
Yeah, so it's that sort of difference between swiping, just continuously swiping, and actually going out and trying to date and find that right partner for the long haul. Hey,
exactly.
Yeah. So what just to double click quickly on that, what are sort of those hooks, the things that you expect someone who's like really serious to know about you or any other like VC firm from a high level, that they should make sure that they're hitting in that email? There's certain metrics that they should be talking about, things like that.
I would say shortcut, mention one fund related announcement, mention one portfolio company. And that kind of is like a hack of like, oh, this person sounds like they know what they're talking about. Say, oh, congrats, I saw you raise your fund at the end of last year. Hope you're still deploying now. Hope the summer's been nice. And we're in a very similar space to company ABC in your portfolio. Would love to chat and get your thoughts on the space. That shows a lot of thought.
Awesome. Yeah, love that. Good advice. So Mark, angel investor, and somebody who's also reached out, what have you found to be the things that help you as a founder, grab that hook into an investor? And then on the investor side, what have you found have been sort of those key things that get you hooked in that initial reach out?
I've had the most success with referrals and just getting introductions to groups that I want to talk to. As an example, I don't know if you remember, Jesse, there was probably a year ago or so, there was a VC that was on the panel, just almost exactly like this, just talking about the current environment at the time. And their portfolio was different than, like, I'm an ag tech and they were in fintech, but it was very closely aligned to what we do. And that just, we're still talking based on that. So I asked, in this case, Jesse, if he could make that introduction and start that conversation, and then it made that very easy. And that's with the groups that we are talking to. That's 100% of the way it's worked. It's like, hey, I know you know one person, and they know many other people that they could potentially introduce you to, and that's always led to a intro call 100% of the time based on that referral. So I haven't yet tried what Matt was talking about, like with the blanket approach or the blind approach to have that. But it's identifying, and in that example, Jesse, when you introduced me to David at the time, like I did the research on what their portfolio was, like Matt said, to understand what they have, what they're looking for, and how you align with what you perceive that they, what's important to them, even before that call. And that certainly helps.
Awesome. Thanks, Mark. And just to double click on that a little bit more, what to you are sort of those key characteristics that you found that distinguish like a startup that's worth moving forward with, like even to like have that first meeting, like that you've seen, even like, for example, especially actually with TNT, you participate in the TNT process. We do that quick review going into the top 20. What have you seen kind of in that early application that really grabs your attention and makes you want to, I want to meet with this company?
Although it is angel investing, I look for more detail than what I would perceive to be a normal angel opportunity. Where there's in this, I think in this environment today, and Matt can actually speak to this better. I'm at least in ag tech. The ground has shifted quite a bit in what groups are, what VCs are looking to invest in. So, it's less of, at least in ag tech, it's less of the vision and the pie in the sky opportunity versus here's the real numbers and here's the traction that we have. Here's some history, whether it's history of the founder, history of the business. If it's a new business, then, some important history would be good to have in there of the successes that the CEO or owner has had, and what that experience is bringing into the space, and then that opportunity for that angel investor.
Yeah.
So the ones that I voted on with with the round that I was involved in, the ones that impressed me the most were the ones that talked about their experience, how that dovetailed well into the business plan, and then how that also sped up the traction that they currently had, and what that, how they project going forward. Like that foundation, I found very different between, like if we looked at, like you said, 20, there was a big difference between that component of what those pitches look like.
Yeah. And Matt, just to come to you here, as Mark mentioned on this topic, like what are you seeing? What are you looking for in a deck? How are you prioritizing, the vol? Like obviously you're getting a big volume. And how are you filtering through that when it comes to looking through a deck?
I'll speak on two cases: the general market of what we're seeing right now, and more specifically us, because Brightspark does have a very specific approach. But general market wise, I think Mark absolutely hits it head on the nails. Was 2 years ago, the limiting factor was, your ambition. How big did you want to build your company? Money was there, talent was there. We just need to get you to think as hugely as possible. 2 years later, right now, the limiting factor seems to be execution before your money runs out. And do you actually have a business? Are you making money? Are you constantly dripping money away? How much money do we need to get you to the next stage? And if you do everything correctly, how big is that reward, and is that worth it anyways? So we've definitely come down to ground level a bit more. On Brightspark's end, we're generally speaking not your first check investor, perhaps your second or your third. So we do look for a level of execution to see that either if this is a space that requires a long lead time, so very deep tech, that you at least have the proof points. You come from serious academic background, or you've done this before. If it is a less technical space in a much more, let's call it like a marketplace or an e-commerce play, we want to see incredible top decile execution, and then all the figures that say this is going to continue onwards. And those are kind of the key points we typically ask for in a deck. Is by the end of that deck, I should be able to reasonably explain to anybody else, what does this company do? Why do the founders think they have the best shot at this? And what is the reward if everything goes correctly at the minimum?
Like that. That's some very helpful advice there, Matt. Sabina, when you were crafting your decks and sending them out to companies, how did you think about them? And also, what did you get any feedback or advice? And how did sort of the deck evolve through the raise and through the time, or did it kind of just stay the same the whole time?
Yeah, the best feedback we got was early on by some close investors that really took, sat with us and really tore it apart. And I would say it evolved, huge from where we started to what we ended up with we did that over the summer period and then sort of hit the ground running in September with what we thought was a first version of a deck. And I would say it evolved nightly. I kept careful track of who had what deck and who had what version, so that I knew what they were looking at and what may have evolved since then in subsequent conversations. But it was a nightly exercise. And I think, investors were gracious enough to give us their time. Some of them, many of them, as Matt described, you don't get a response back. But when you did have that opportunity to pitch, I would say none of them really, I didn't take any more of their time, or they didn't reach out themselves to provide feedback. But you could tell, you could watch. Zoom is great for that, right? You can see the facial inflections. You can see when they're intrigued. You can see when they're confused. You can tell where the questions are heading, where you need better story and better clarity. And even yourself, when you're pitching, you can kind of tell where the sticky parts are and what you need to improve. So it just was a constant iteration. I would say there were hundreds of versions of the deck, and as it improved, and then it was out of date like a week after the close. So yeah, it's a constant. Learn how to use PowerPoint really well, or whatever you use.
Yeah, Mark, has that been your experience as well as going out there to raise a Series A?
Absolutely. It's my tendency, and I don't think I'm necessarily unique with owners, is we love to talk about our business. So one of the most valuable things that I went through, I joined a Canadian Tech Accelerator just to prepare myself for, making sure we had our ducks in a row to get this investment in. And they had a pitch coach that was part of it. And so we, in a 1 hour meeting before this, I would talk and ramble on and get distracted, talk about, passionate about the business, and spend 45 minutes talking about, going through the pitch deck and only leaving a short amount of time for questions. And so what they made us go through, and what I found the most valuable, is to do a 2-minute pitch deck, 2-minute pitch, and get all of your information across. And that, for me anyway, was incredibly hard to do. But once we got to that point, you have that memorized. Everyone talks about an elevator's pitch, and you need that. So we had a slide deck, and 2 minutes max, and that really helps you focus in. And that, like Sabina mentioned, that message is actually different for every investor that you're talking to, because they're what they're looking for is different. So if you can identify what the uniquenesses in that first call, keep it to 2 minutes, 5 minutes at the most, as quick as you can to get through your points, and then start getting through questions and stuff like that. Like that's what I found, is that I had the hardest time going from here's how brilliant we are to making it here's how brilliant we are, but in a very small little nugget. That for us was a really good part of the journey, and all of our discussions post that experience were much more fruitful and much deeper than before.
That's some great advice, and great advice from Sabina as well on the evolution of the deck. Sort of how, just to give some practical advice here, how did you go about doing that, Mark? What was the exercise that you did to like, because I know that a lot of founders like I got to explain all this stuff. How do I possibly get it down to 2 minutes? So what was the exercise that you went through to do that?
Well, it's you're talking about, really only talk about you're focusing on two things with your audience: greed and fear of missing out. So what's in it for the person that you're talking to, and how do you make the money? Like Matt said, although the ground has shifted as far as no longer are people investing in great ideas. They're investing in like how soon. The questions are, what's your cash flow? When are you breaking? When are your cash flow? When's your burn zero? And then what does this money do beyond that? And so yeah, it's, I don't know. I've rambled on past your question, which is the point of the pitch, right? To focus on the answer and focus on how are you going to make groups like Matt money, and how fast can you do it, and why? Like, what makes you unique?
Yeah, Sabina, do you want to add anything to that? Did you have, like, I think you said a great piece of advice there, have that core group of investors around you. Was there anything else that really helped you iterate and grow during the process of raising?
Yeah, I mean, in addition to the deck, we were, because of the early stage of our company, especially, we were, evolving our materials, evolving our pro forma, evolving our financial, knowledge, our competitive analysis. All of those materials we're developing as well, in keeping pace with the questions that were being asked and the level of detail that they were looking for. So we got a lot of feedback from the various pitches to improve those materials, in addition to the deck, because the deck gets you that first conversation. But as was already mentioned, keeping that short and sweet and allowing a conversation to occur after is really the best bet. And then you have to support that with materials, right? Because right after that, there's momentum, and then there's an ask for, okay, well, can you send me this, that, and the other thing? And I think you really want to chase those investors that have momentum, because you've piqued their interest, they're interested, and it's a timing game. And 2 weeks later, they may be onto something else, busy, overwhelmed by whatever else might be going on. So you have to have the materials ready to back up what you've said and how you've pitched. So the pitch deck is a small piece of it.
Absolutely. Yeah. The data room is a key component. That's something we'll be talking about later in the summit for those that apply, on how to pull that together. We have some materials on our YouTube page if you want to learn more about how to set that up. Matt, thinking about that getting as they're preparing for that first meeting with you, right? So they've got that deck ready. What is that material that you're going to kind of be expecting in that first meeting? What is the questions that you're going to be asking? How should they be preparing to make sure that they're going to show up and not just get that first meeting, but get a second meeting? Because I think that's really sort of important. And maybe you want to just articulate kind of like, what is the process sort of for a VC? Because the VC process is actually very similar to the way that the TNT process works as we sort of filter through.
Yeah, let's start with the last bit of the question, and then we'll dive into the first bit that's more meaty. The VC process is, well, I can give the numbers for our firm, actually. I think it'd be interesting for everyone to see. On the very high level funnel wise, every year, we're seeing anywhere from 1,200 to 1,500 opportunities, right? These are just companies that have reached out to us that are in our mind sphere somehow. Out of those, we're going to take somewhere in the realm of 400 to 600 meetings. And those are the times where we spend at least 30 minutes together and really get to chew in on the deck and understand. From those, the amount that convert into a second meeting, from let's say 500, maybe 50. So that's a giant cutoff right there. Is that after the first initial meeting, we understand, is this even something we could invest in? And I do want to stress that whether or not you move from a first to second should not be a track metric that you look at as how successful of a company you are. That's just more of a question of how much of a fit you are with that specific group of investors. If I'm running a deep tech robotics company and I speak only to a bunch of consumer VCs, I'm going to get to nowhere, right? So that's not don't beat yourself up on that. It's more about fit than anything else. From those 50 opportunities, that might translate into second meeting, sorry, that might translate into, let's call it 12 to 15 very, very deep due diligences where we get into customer references and want to make sure we're speaking to as many folks as we can. We open up our own network, we open up co-investor networks, and that might translate into anywhere between 0 to 4 deals being done in that year. So it's a very steep funnel. Fit is a huge part of it. More than anything else, is that, dude, is this a company, an industry, and vertical, a timing, a person that we can build conviction and belief in. Now, in terms of, let's say you got that first meeting and you think it's a good fit, everything that you've learned about the person sitting on the other side says that it should be. I would say the best thing you can do to get yourself and make sure that you're going to that second meeting is, as Sabina said, open up a conversation. Don't pitch for 30 minutes. It makes it very hard to stay focused and engaged, but talk it out, right? If you truly understand the business, which you should, it should just be free flowing, and little things that the investor will pay particular attention to will come up. You'll notice, hey, is this a very metrics driven investor? Because they'll ask you a lot of numbers question. Is this a very IP driven investor? Is this a very market timing condition driven investor? Whatever it might be. And that lets you follow up with more relevant things on that front specifically. Sometimes it's going to be everything. Sometimes it's just going to be, okay, this person loves to see the numbers, so let's export our dashboards and share what we can that's not confidential, and really drive interest that they have the ammunition they need on their end to convince the rest of their firm that this is someone worth us spending more time on.
That's wow. That's such a comprehensive and great answer there, Matt. It's important to know too is that you are trying to build internal champions, right? That last point you just mentioned there, that's something that you're doing here at Startup TNT as well during our process. If you can get the person on the other side of the table, whether they're an associate or a general partner, right? I know a lot of firms a lot of people out there give advice, oh, don't talk to the analyst, don't talk to the associate, make sure you're talking to the partners. But a lot of firms, often it's getting the associates and the analysts on board that you need to do first, get that internal champion before you can really win over the rest of the people. So make sure you're finding that person, going out and building that relationship with them. And then that's how you're going to get to move into that next step. For you, Sabina and Mark, as founders, we'll start with you, Sabina. What did you find in that first meeting that maybe that you weren't prepared for when you were just starting out your raise, and that you're like, okay, I got to make sure I have that always every single time, or something that you did where you're like, okay, definitely don't want to ever say that again in a meeting because that didn't get a good reaction. Just, I don't know, maybe some things to avoid or some things to make sure that you prep for from your own experience.
Oh man, I feel unprepared for that question. I feel like everything was like went into that category. I mean, it was like a pretty steep. I don't think I've ever learned as much as I did hour by hour during those 4 months of pitching. And so kind of everything felt, I don't think I felt prepared for any single meeting, because every time my game got better, their game, the level of conversation got better. And so I always wished I had more information and more understanding, but I don't, honestly, I'm going to go flat there on telling you one thing that I wish I was better. I mean, I wish the data room had been more prepared by the time we started that first pitch, because we lost some momentum with some people, because we had some things that we're still kind of cleaning up and getting ready. That's probably my biggest, next time that data room is going to be solid or a solid version 1 that I'm ready to share, to not avoid those delays and lose any momentum. Absolutely.
I think that's the great personal anecdote there, though, Sabina, and knowing that, even for someone who was the winner of a summit, had an amazing round of investment, raised over 2 million Canadian. Still, it wasn't like it was easy. It wasn't like it was simple. I think people see the headlines and sometimes think, oh, they just wrote it on the back of a napkin and got the money, right? There's a lot of sort of behind the scenes magic, right?
Yeah, I would say that, by the time we came into the Startup TNT portion of that round, we had a lot of momentum. And that really showed. So those early first conversations with, whether it was with a VC or an angel or pretty much anyone who would listen, that the pitch evolved. So the pitch evolved a lot before we got to the big names, and certainly before we got to the intros that were being made for us, because as Matt said, that's where you're going to get your greatest traction. So coming into those feeling like you've got your feet under you a little bit. And then we were lucky that by the time the startup TNT process started, we had some great momentum, and we had a little, you get a little bit of a boost. We had some great conversations going on. We felt like we had a couple of things in the fire. Ducks in a row and irons in the yeah. So, and I think investors can feel momentum. It really, brings that fear of missing out thing, right? When you can start to be like, well, we've got this going on and that going on. I'm expecting a term sheet here, and then there's a pace to it. So as much as you can create that momentum or that feeling of momentum, I think that's important.
Yeah, I think that's also great advice. Getting those practice rounds in, playing that preseason game before you start the regular season. That's really important. Just kind of get those reps in. Do some pitches to your friends and family. Get iron out so you're not catching yourself like I am right now as I'm speaking. So you can speak really succinctly and with brevity to the VCs that you're speaking with. Mark, from your perspective, you're an angel investor. What are those, and also a founder, what are those things that you've seen in mistakes people do prepping for a meeting, or even as they get into the meeting? What are some sort of red flags that you've noticed in the actual meeting itself from both sides?
Probably on both sides, it would be be prepared, and know your numbers and don't make them up. If you don't know if you're not exactly sure what your lifetime value of your customer is in a segment, don't make it up, because if that investor, whether you're the investor or you're that will be unearthed in due diligence pretty quickly if the numbers are made up. Just be prepared. Like Matt said, most of the first conversations are intros, just to get to know each other a little bit and to find some facts, to keep interest, to get from, what Matt said, that first 1,500 down to 500, and you want to be down to that next 50, right? So how do you identify in those conversations, present, talk about your business, have confidence, talk about momentum, like Sabina said, but also be ready in case that investor asks some detailed questions. I'll just give you an example on my part. We've done a lot of first meetings over the last month or two, and they're all almost all of them are exactly what Matt said. Yeah, it's, get to know each other. You spend half an hour and then you set up the next meeting. One of the last meetings I had, and I didn't have my numbers in front of me, and it was on a Monday morning. I was ill prepared for, he was analytical to the nth degree. It was like, hey, how are you doing? Nice to meet you. Okay, what about this? What about this? It's like, oh shit, I knew relative numbers, but the exact numbers I didn't have on me. So it meant, you just meant a follow-up that I had to do, which was fine. But I caught myself personally in not being as prepared as I easily could have been, just because of the cadence of what the meetings were up until then. But everyone is different that you're talking to. So it's from Sabina had really good advice, get your data room all ready. They're going to ask for financials, they're going to ask for projections, they're going to ask for competitor analysis. There's a dozen different things that are not that difficult to put together, and just have them live, up to date, and ready to press send or to give access to that data room if they're ready. So it's just be ready for a conversation, but also have all your data and information right beside you or in your head to answer questions if they dive into that.
Yeah, that's some great advice there, Mark. I think one of the things I gleaned out of there as well is pick when you're going to have the meeting very carefully, right? So that we're picking it for that, maybe that Monday morning coming in after, or Tuesday morning after a long weekend, maybe not the right choice, right? Maybe put it a little later in the day so you got time to prepare, and make sure you're doing it. Say you're not doing it right after a different in-person meeting, so you got to race and you can't have that information in front of you. You're doing it from your phone, things like that. Just take it seriously, right? As I said, this is dating, right? You are trying to find your future partner in this journey on the startup. So make sure you're going about it in the right way. But come back to you, Matt. Something that comes up a lot, and it kind of was mentioned here. Both, we got the data side, but so there's sort of the objective side of the startups and pitching for those meetings versus the subjective, right? The more emotional, building that connection with the founders. So how do you evaluate those two things in that first meeting, or even before the first meeting? So you met the startup at a conference or an event, and how much was it like how cool they were, how fun they were in person versus what they were telling you in terms of their metrics?
This is a very interesting question, because depending on who you're talking to on the other side, it can work on different levels. There are investors out there who I think take that, the personality and the hype factor and the FOMO, into a very serious portion of their decision. And it would be advantageous for you to have that. And similarly, if you didn't have it, they might not even notice you in the first place. I would say, though, as you go up in the sophistication, I don't say that in a judgmental way, but just in the level of detail that an investment firm would go into, generally speaking, that factor is going to matter much less, to the point where really it's about who you are as a person, your credentials, the way you think, and what your company is doing, the truth facts of it, and where you want to take it. And everything else around it becomes confetti. The one point I wanted to make on that side, God, it's like the thought train just escaped me. I'll come back to it when I find it.
It's okay, Matt. Thinking about that for you, Sabina, or actually thinking more about the summit itself. And it is a bit of a competition, right? How did you sort of position or differentiate yourself, or did you even, consider who else was on the field, or you're just kind of like focused on what you were doing? How did you sort of position and differentiate yourself to be, the winning deal through the process and sort of?
Yeah, I don't think we were a fast moving train by that time. You're pretty tight and you're focused on your goal, and you're not shifting your company. Like, who you are is who you are at that point. And so I don't think there was a lot of positioning for that specific type of summit or audience. But I think it is a bit of a game show type atmosphere. It is a different type of audience, and it is a different type of pitch. And so, making it a little more pitchy and a little less, substance and a little more show is definitely something that, my background as an engineer and a researcher makes me super uncomfortable, but going to a few pitches and kind of seeing the sort of like what gets the momentum up, and understanding, I think, what Startup TNT is doing and creating that groundswell and community support and kind of playing into that vision. It's just an entirely different pitch than what when you're across the table from an investor who you're trying to connect with one-on-one. So yeah, just letting yourself be a little more game show-esque, I think, helps.
Awesome. Yeah, like that. We've had some really fun pitches here at TNT, that's for sure. That's one of my favorites is the winner that was in Saskatchewan in the same summit that you were in, Off Street. Had one of the funnest pitches I've ever seen. If folks want to go back and check it out, finale of Summit 6 on YouTube. Mark, kind of where are you at with back to that question on sort of subjective passion, vision of the founder versus the raw data? What are you looking for? What have you found that the other angel investors that you're interacting with there in Manitoba are looking for between those two things?
Well, as an investor, you're really investing in the pitch, or the person, I should say. So, you have to have passion. You need to be able to speak around your business in great detail in your industry, because I invest in the business, but the business is reliant on the person or the group driving it. So like, if you have you need to catch the attention of the potential investor. You need to really explain why you're different. Someone mentioned robotics. That's a that is a congested field. And so how are you different, right? And how do you talk about that very quickly to get someone interested in you? Because the first interest is in you and the business, and then it's about the investments that I've made are 100% driven by the personalities of the person or the group of people that are driving it. And so have passion. Like I've seen a couple pitches, and hopefully it wasn't one. I don't think it was one that I did, but I've seen pitches before where it's not the right person making the pitch. Like probably a great business, but if it's slow and not that enthusiastic, and that's just some people's personality, and it gets it does get a lot of people out of your comfort zone, but you have to have energy, you have to really be passionate. We all love what we do, but you have to show it, right? This is why we're kicking ass. This is why our customers love us, and this is why this is what we can do together with you. That type of passion is important.
Awesome. Yeah, I agree. I think that point there about the person pitching, often the messenger is the message, right? And in your body language, how you're conveying it, the tone you're using can really speak volumes about what you're talking about, right? And that comes across to the investors on the other side.
Yeah, like a lot of, go ahead, Sabina. Sorry.
Yeah.
No, I didn't want to cut you off. I just want to add something when you're done there. You go ahead.
Yeah, I was. One thing to remember, I think most companies that as you're pitching, if it's an investor or, as you get larger to Series A, you feel a little like an imposter, like you're asking for money and you're not, you're not sure, right? If that person, like if I'm talking to Matt for the first time, I don't know if Matt's going to be interested. So that right away the tendency of a lot of people would be to feel defeated or like an imposter, right? Imposter syndrome. A lot of investors or owners have that. But get past that. Like when you're meeting someone for the first time or the 10th time, you're the expert in your business and your domain, and own it. And and that, just like Sabina said earlier, that sometimes just takes practice. So before you get out and start talking to people, do your pitch in front of your employees. Do your pitch in front of your friends, do your family, or anyone that has knowledge of your space and you, and just practice and practice and practice. And even if it's in front of a mirror, time yourself and make sure that you get your points across, and you're the expert. And you don't have to be humble about it. Don't be brash, or don't brag about it, but just have that confidence to be able to know that you're the expert.
Yeah, I love that, Mark. Sabina, yeah, you wanted to add some comments in there.
Yeah, I agree. You've got to stand proud in front of what you're doing with conviction. But I think showing where I felt like I really connected and I built the best relationships, and now those are our key investors, is where there was a point where there was honest humility, where it was like, wow, I really don't, where you're able to show that I don't know the answer to that. Not on something where you haven't thought about. You don't want to reveal like, oh, I've never even considered that. But something where you're like, I don't know that answer, or I'm unsure of that answer, but here's why I think it's okay. Here's what we know today, and here's where we're going. But I think when you always have an answer to everything, you can tell they just sort of close up, and you're stonewalling them with answers. So finding something where you can be honest about what you know and don't know really, I think, makes that connection real. And then you get into a real conversation with them.
Awesome. Yeah, Matt, do you have any examples? I know you want to sanitize a little bit, but of yourself in these meetings where you've been particularly impressed by by a founder, the way they acted and or handled a situation or communicated with you in such a way that made them stand out and therefore get investment down the road, like something that maybe made them stand out versus the pitch deck where you had a preconception and then you met with the founder and you're like, holy shit, this person's pretty impressive.
Yeah, there's a lot of different holy shit moments. I'll speak on those, but there's also the two earlier trains of thoughts came back, so I'll quickly touch on those after. But I think the biggest holy shit ones for me, generally speaking, it's when you go in with a belief and it's just completely smashed within the first 2 minutes, right? And an example of this is we receive a deck that's very technical and super, super IP driven from deep academia. And you meet the founder and they're able to explain that to a 3-year-old. That's very powerful. Instantly you realize, okay, this is someone that knows the craft inside and out. Similarly, it's when you talk to someone who might be doing something at a very consumer level that seems almost easy to understand, but they're able to explain it down to the 84 steps that make us work specifically and why every single one of those are tested to a certain way. It just gives you an appreciation that this person has gone beyond the typical boundaries of their craft and gone into a direction that they might not need to succeed in there, but has done that. The one thing that Mark said about imposter syndrome, I think that one's really interesting to touch upon because we get that a lot from founders. And my first foray into investing was working with first-time founders, all from university. So these are 20-year-olds, 22-year-olds going out there with their first companies, raising their first checks ever from investors. And you can imagine just imposter syndrome. It's left and right and paralyzing. And the thing we always told them was, it doesn't go away, but you need just to have an insurmountable mountain of evidence against it. If you can tell yourself, yes, I might not feel ready for XYZ, but I have done this, I have done that. Every single one of those is another proof point that I deserve to be here and that I have earned it. That helps a lot. And that also shows. The fake it till you make it thing doesn't really cut out once you dive deep enough into it, into the funnel. And the other thing about that, the train of thought that I lost earlier, we will never invest in a founder that we don't have deep conviction in. That has never happened. But have we invested in founders that we truly believed in markets or projects or visions that we might not be the most gung-ho on? Absolutely. Absolutely. And I don't know how many times we just say, but they'll figure it out as a big part of that decision. And usually that really boils down to one person or two people max, and having that deep understanding of them, which is why for us, these repeat relationships with repeat founders are often so valuable, because we know them.
Love that, Matt. This is some great pieces of advice there at the end. I agree on that point about picking the founder. I think I learned that lesson a little bit the hard way. Made a small investment in a founder. We were like, we love the product and the market. Like, we can change the founder, right? It's like that classic girlfriend that thinks you can change, and it's like, no, you can't change the founder. They are who they are. The company's still moving along, but the relationship there is not what it used to be. And so I recommend, to everybody out there that is a founder, you are trying to find that long-term partner. So make sure that's what you're entering into. We've only got a couple minutes left, so just want to end off with just one piece of advice from Sabina. Anything else just to leave them on here? Piece of advice around going out and raising capital, getting that meeting with investors, getting investors' attention. Anything you suggest?
I think the biggest thing is build your network and maintain your network, and so that you can figure out who's ready for that investment, who's interested in that investment, what they're looking for. You've had that pitch. All of that requires networking and maintaining that network between rounds so that you can really leverage it going forward. And I think one thing we didn't touch on today was that lead. Matthew opened up by saying they're a lead investor, and that's what you need to find first, the lead. And I was told, don't spend any time on anybody who's not a lead investor. I didn't heed that advice because it was too hard to say no to other opportunities that were coming along. But it really is a waste of time, because once you have that lead investor, everything everything just falls into place in ways that and then it became a little bit tricky to try to figure out how to fit everyone into the type of round that lead had. So much easier if you have a lead and then deal with the rest of it after that.
Awesome. Mark, same to you. Any last piece of advice on this topic?
Well, be prepared for a journey. As Matt said, the environment is drastically different than it was 2 years ago. So it's going to take work, and a lot of work. Be tenacious. Ask for referrals. Do your research. Just ask, for introductions from anyone that can make them. As you start kind of your shotgun approach, you need to be targeted. But in this environment, you can't be too specific on what you're targeting, I don't think, because you need to. Interest rates have risen drastically in the last year. Family offices are pretty happy making their 7% with zero risk. So like just the appetite for investment, I think, is still there. There's a lot of money to be deployed, but it's extremely patient. So, just be ready for a journey. Sabina has some great advice, like just reflect on every conversation, what went right, what went wrong, what you could focus on next, because it's an ever evolving landscape. And the last 6 months, that ever evolving landscape has gotten more and more difficult every week as far as raising money goes. So it's, believe in yourself. The reason why people are meeting with you is because of who you are and what your business is. And just be tenacious. That's, as a CEO raising money, that's your number one job. And that's it's going to be work.
Love that, Mark. Great advice. Yeah, it is a lot of work, and it is going to be a full-time job once you're actually getting into it. But I think Sabina's point, spend that early time doing that 10-20% of your week going out raising capital. Matt, want you to bring us home here. One piece of advice, and also if you want to mention here at the end, what can folks do if they want to reach out to you and pitch something to you there at Brightspark? What are you looking for?
Yeah, one note of advice, and definitely agree on the two previous points, especially on the journey. This is a long journey, but my point would be, unless you are 1,000% certain that you absolutely need venture capital to accomplish what you want to do, how you want to do it, when you want to do it, unless that is the case, please don't raise from VCs. You are going just to lock yourself up in a nightmare that is not going to end well for anyone. But if you found yourself on the other side of that end and that you very much want to embark on that journey, you can reach me at Matt, M-A-T-T, at brightspark.com. Brightspark, all one word. I'm sure if you search us up, you'll find our website. And Jesse, thank you for having us.
Awesome, Matt. That was a great piece of advice there. Something to mention on that, because I like that piece of advice because it transitions very nicely into talking about next week's session, which is a financial landscape review with BDC Capital, RBCX, and the Grant Sherpa. We're going to be talking about all the different options out there to fund your company, the venture capital world, the private equity world, how angel investors kind of play in both, and how with the start of TNT process isn't necessarily just venture capital. We do other forms of investing as well, and there's also grants and things available to you out there in the ecosystem. So hope you can join us next week, same time, same place. Thank you so much to Matt, to Sabina, and to Mark for joining us today. These are some great insights living on YouTube forever. Also, thank you to Emily out of Manitoba for sponsoring these sessions. We really appreciate it. We're looking forward to another session next week, and then there's another one the week after, 2 weeks after that on the 28th. Deadline for applications is due on the 18th. Hope you can get them in, and we can see you in the Fall Summit. Thank you very much, everybody. Have a great rest of your day.
Thank you.
Thank you.
Thank you.